My favourite of Buffett's sayings is that we should be greedy when others are fearful and fearful when others are greedy. Now, this has definitely been the case over the last year. In the second half of 2018, markets were absolutely fearful and share prices were falling all around us. And to be fair to ourselves, we were picking up shares in some of our favourite companies, companies like Diageo, like Relex and like Croda, where their share prices we felt had come back too far. And so far in 2019, this has proved the case, and the Footsie AllShare has delivered a return of almost 10% year to date. The only thing in my opinion that has really changed is that the Federal Reserve is no longer raising interest rates. The uncertainties of Brexit, of Trump's policies, of the Chinese economy that worried the market so much last year are still very much here. But my point, which I think is most relevant, is that there are always uncertainties to investors, and this is the reason that we are allowed to earn a positive return, or put differently, no risk, no reward. Credit Suisse recently produced an excellent report which gives asset class returns from 1900 up until today. And the stat that really stood out for me from this was that UK equities have delivered a real return of 8% a year over that time period. Obviously there have been some awful years and there have been some great years, but I think you'll agree that overall 8% a year is a very satisfactory return. The 3 points that really stood out for me, firstly, that it pays to be an optimist as an investor. Secondly, that you have to be invested for the long term. And thirdly, that this is most relevant for young investors who can feel the effect of long-term compounding on their investment returns.